you probably have a financial account of some kind. You may have a bank account, you may have a 401k, you may have some IRAs, some stock, or any kind of similar investments. The question is, what happens to these accounts when you pass? And that answer comes out of the beneficiary form. Okay, so when you bought or you signed up for these benefits or for these investments, they gave you a beneficiary form to fill out that says what happens when you die, or if there's a joint tenant, what happens when you both die. When I talk to my clients about estate planning, we go over each of these accounts because we want to make sure that they go to the right people, because we want to make sure that they work the way you want them to work. So in working with my clients and looking over some of their forms, I realized that most people do not fill it out correctly, or at least they do not understand what it does or what it says. And that is because there are some legal terms that they don't understand, or because they don't fully read the entire document, or if they do, they don't really understand the different nuances in their choices. So I printed out some forms off the internet. They're called transfer on death forms, or maybe a beneficiary designation form. They address what will happen to the account, to the stock, IRA, investment, annuity, whatever you may have when you die, or if there is a joint tenant, when the joint tenant dies. So let's look over them together, because it's important to understand the various options you have. Okay, so they all have the same kind of basic information: the account number, who's the account owner or the shareholder, who is, if there's a joint tenant, who is the joint tenant, and then it goes into beneficiary designations. Most of them, if not all of them, has a primary beneficiary and an alternate beneficiary option, or a contingent beneficiary, or a secondary beneficiary option. So let's look over what kind of information is required from the beneficiaries. They have the same, again, basic information in all of them. What's the name of the beneficiary? What's their address? What's their social, date of birth? What percentage do you want that beneficiary to inherit? And basically this is it in this form that I'm looking at. Then it goes into the secondary beneficiary, and it has the same information. What's the name? Maybe some of them ask you what's the relationship, and so on. So what else do you need to know about this form? Well, I would say first you need to make sure you have a primary beneficiary, the first beneficiary, and then that you have an alternate beneficiary or a contingent beneficiary. That way, if something happens to the first beneficiary, they either die before you or they die with you and you never updated the form, you have the contingent beneficiary maybe to fall on to. But first, let's see, why is it so important to actually read page 2 or 3 or 4? Because it addresses what happens if a beneficiary does not survive the owner. So let's say you have 2 kids. I am the owner, I have 2 kids, 2 adult kids. I'm happy to just list them directly to receive these funds. So then what happens if a beneficiary, one of my kids, do not survive me? And it's all in the form, so make sure you read it. This one of them says, if no beneficiary survives the owner, the account will be treated as belonging to the owner's estate. What does that mean? It means if you only have 1 beneficiary or no beneficiary, if you have 3 but the 3 of them do not survive you, the account will go to your estate, meaning that it will likely have to be probated. Okay, people associate probate with real estate, which is fair enough. But also probate can happen when there is no listed beneficiary on your 401k, on your stock, or the beneficiaries you have listed predeceased. Imagine husband and wife, they just have each other and they predecease. One predeceases and they never update. Or imagine having a mom or a sister or someone else and they predecease. In that situation, it says right here in the instructions, that account will be treated as it belongs to the owner's estate. So we want to avoid probate, so you make sure you have current and alive beneficiaries listed. Then it says if a beneficiary survives the owner but is not alive at the time the shares were presented for re-registrations, the share would have been transferred to the beneficiary's estate. So that means if I have 2 kids and I passed and then the two kids are entitled to receive half and half. Let's say if one child dies before the transfer is actually made, that child's share, their half, will go to their estate, again, likely requiring that a probate has to be filed. But even more important says that where multiple beneficiaries have been designated, but if one of them or more fail to survive the owner, the shares will, upon the owner's death, be distributed among the remaining beneficiaries in proportion to their allotted portions. What does that mean? See, so that this is where the legalese comes a little bit into place. This basically says I have two kids listed as beneficiaries. If one of them dies, the other one will receive 100%. Is that what you want? Maybe it is, maybe it is not. But if, let's say, I have two adult kids and they have kids of their own, I may want that if I die and a child predeceases me or dies before receiving their share, that their share, their 50%, be distributed to their kids. See the difference here? Two kids, I die, one of them dies maybe before me, I would want their share to go directly to their kids, not to my other child. So instead of my other child getting 100%, my surviving child will get 50%, and the kids of my predeceased child will get 50%. This form says, no, my surviving child will get 100%. That might be what some of you may want, that might be what you don't want. So make sure you read the form. If you have any questions and you don't understand what the form says, be sure to see your financial advisor or someone who's helping you with those, or even better, see an estate planning attorney and talk about the various options you have. So this is what this form says. Like I said, it doesn't matter what company it is because they are all about the same. This is a different one, and it's called the Transfer on Death Registration Form. And I'm going to read what they say about what happens if a beneficiary predeceases the owner. If I have two kids, when I die, one of my child, let's say predeceased, died before I did, and I just never got the chance, or I never even thought about updating my beneficiary. It says, if one or more beneficiaries are deceased, whether before or after the account owner, the assets will be divided equally amongst the surviving beneficiaries. This says the exact same thing as the other one said in different language. It says, if one of my kids predecease me, the other ones, the surviving beneficiaries, or let's say I have six. I have my 3 kids and my 3 grandkids or something like that. The ones who are alive at the time of my death will receive equal shares. It will not go down to their kids. Just be sure that's what you want, or that's what it says. That the form says what you want it to say. The third form says kind of the same thing. It says, if a single primary beneficiary does not survive, then the security, the stocks, whatever accounts you have, will be transferred to the surviving contingent beneficiary. See, this actually talks about having a contingent, having a secondary beneficiary. And it says, if the primary beneficiaries whom you have designated, if they don't survive you, let's say it's a spouse or even a child, then it goes to the contingent beneficiaries. Make sure that's what you want. Again, because you may want that if the primary beneficiary, who is your child, if they don't survive you, you want it to go to their kids. So in order to do that on this form, you would have to have the kids as contingent beneficiaries. Lastly, these two forms are a little different than the other ones, as in it has a little more information. So other than the account number, names, and all that, it goes into primary and contingent or secondary beneficiaries. But the difference is that they have an option here. They have a box where it says per stirpes. Per stirpes, it's spelled P-E-R, and then it's separate word, S-T-I-R-P-E-S. That's a legal term that if you would look at these forms, you wouldn't know necessarily what per stirpes means. It basically says if that beneficiary, primary or contingent beneficiary, has children, it'll go to their children. That's what per stirpe means, but it's a box for you to check or not check. Well, you probably don't know what it means, so maybe you won't check it. Okay, so now you know, make sure you go back to your forms and see. So this has primary beneficiaries where you list your people and their percentages and stuff, and then at the very bottom says per stirpes with a little box. Check it or you don't. If you don't check it and your primary beneficiaries pass, it'll go to your contingent beneficiaries, not to their children, not to the primary beneficiaries' children, which may or may not be what you want. It may be that your contingent beneficiaries are the primary beneficiaries' children anyway. But if you have 3 kids and they all have 2 or 3 kids, you probably cannot put everyone in here. You probably don't fully write down what you would want to happen. So ideally, how you can avoid all this is by having a trust, by having the trust as a beneficiary, and have the trust spell out exactly the terms, exactly what you want to happen when you pass, and what happens if a beneficiary is incapacitated, or if a beneficiary predeceases, or if a beneficiary has or does not have kids. So the last form is very similar. It has the per stirpes thing, but this also says pro rata, Prorata. What does that mean? And it has boxes for you to check. You want per stirpes or pro rata? Well, this one actually has the definition for each one of them. But again, it may be legalese. You read it and you're not sure what it means. Ideally, you work with an estate planning attorney that can answer all of these questions and that can help you work through it, or include it in with your other documents, with your trust, with your will, with whatever the situation may be. But in the meantime, for now, if you're not ready to sit down with an estate planning attorney, just go over the documents yourselves, try and read, try to make sure you ask questions to your financial advisor or maybe to your benefit provider, and ask and see if you can get those questions. Make sure you update your beneficiaries, make sure you check on them every now and then, especially if something happens in your family. And then make sure your family knows what accounts you have. All these accounts, investments, and if you don't have a way for your family to find them, they may not upon your passing. I get calls all the time, can you help me find my mom's, my dad's accounts? I don't know if they had a life insurance, I don't know if they have stock or anything like that. It is really hard. So make sure you have a plan in place. Make sure you share this video. Make sure you like our Facebook page. We post these educational videos all the time and educational posts. We also have in-person educational events. Thank you for watching.